Welcome back to the Keiser Report. I'm Max Keiser. And let us welcome back into the studio founder of Gold Money and Monet, deep thinker, Roy Sebag. Welcome back.
Thanks for having me again.
All right, I used this in the first conversation, and I think I must now begin to talk about it, otherwise people will just freak out here. So this is, as I mentioned, 24-karat gold investment jewelry. It's from a company called Monet, which is a company that you founded, you started. And it's fascinating because it is investment jewelry. It is priced in a way that fluctuates exactly with the spot price of gold. And you're educating a whole world, the whole Western world about how gold is actually bought and sold in more or less the Eastern world by weight.
Correct.
That's the key. So you've launched this thing, and the site, the business is really taken off. People have taken to this quite rapidly. How's it going?
It's going really well. I think that, I'm very passionate about gold. It's what led to the founding of Gold Money, Inc., which was originally known as BitGold. And it feeds into what we talked about earlier. At the end of the day, instead of all the elaborate conversations we just had, you can always simplify it that politicians are always going to want to screw you over in a fiat money system. And so gold is your way of preserving your purchasing power. With Gold Money, we did that by establishing a financial service, an institution that allowed you to hold your wealth in gold. But to really help people and broaden access to physical gold, which is really the key here, physical gold, I recognized about 2 years ago that I had to disrupt the jewelry industry. The jewelry industry consumes most of the mined gold. About $150 billion a year flows directly into jewelry. And what I found was that the Eastern jewelry markets were quite efficient. They were actually engaging and dealing with jewelry in the same manner that people have been dealing with jewelry for thousands of years, since the beginning of time. Jewelry is generally made out of 24-karat gold, which just means the way gold is found in nature. When you go and find gold in a rock, it's not 18-karat or 14-karat. That's an invention, a human invention, an alloy, where the pure gold is taken and diluted down. When you find jewelry in the East, it's 24-karat, and it's sold by weight, and it generally is devoid of any gems or diamonds or stones. So the goal is that jewelry is really a weight of objective value. It can be bought, it can be sold, it can be exchanged, forever.
I know I was, one that bought into the myth that you can't own 24-karat gold. It's too soft.
Yeah.
But this is 24-karat gold. It is pliable, it's bendable, but it's not in any way, too soft.
It's soft for a metal, but it's still a metal, and that's the key. People that repeat that myth, it's generally a lie perpetuated by the Western jewelry industry.
Right.
So when I started to learn about the Western jewelry industry, I was really appalled to see that in the old days you could find Tiffany's selling you jewelry by weight. But nowadays, the jewelry industry is really incentivized by Wall Street and by their own greed to have minimal working capital, which means that they try to generate very high returns on their capital and try to generate the highest margins. And they've been engaging in this game of how much margins could we charge our customer for the last 40 years. So when you buy something from Cartier or Tiffany's or even Pandora, which is a lower cost jewelry brand, 90% of what you're paying for is BS. It's basically the brand. They call it the brand, but of course, when you leave the store, you can't sell it for that value. So really, you're just paying a very small amount of money for the intrinsic metal value. And what we're doing with Monet is we're turning that equation 180 degrees. We're inverting it so that when you buy a piece of Monet jewelry, 90% of the value, 80 to 90, is going towards the intrinsic metal value, and only 10% is going to design. And all of our pieces are pure gold, pure platinum. The prices change every single day. When gold goes up, an item is more expensive.
You go to the website, you'll see this item, I think it's called the Torque.
The Torque,
It'll give you the current spot price of this item. And you can, I believe, actually, if you wanted to, I could go to Monet and sell it for the spot price minus a fee.
There's a whole platform. Once you buy an item, you can actually track its performance, just like a stock. You could press sell and sell it. We send you an envelope, just like the old Netflix. You throw it in. It's fully insured. We ship to 80 countries around the world. You can gift items. You can even do something called Monet Harvest, where you pay towards an item, lock in the price at the time of purchase, and once you've fully paid, we ship it to you. So it's a really, really cool way.
What people do when they get these, I see they make a video and they put it on the scale, and they see if it actually weighs the exact weight advertised. And occasionally someone will say, "Oh my God, it's actually a fraction of a gram over what I paid," and they're like ecstatic. And now you've got these. These are interesting. These little charms, because they are pure 24 karat gold, and they're easily to collect. And you know, this is obviously appeals to folks that just want to get in on the gold action in a starter kit, so to speak. But it's quite lovely. So now let's transition to the big picture here, because people are buying gold at Monet. They're storing gold at Gold Money. And then you've got countries like Russia that are buying frickin' hundreds of tons of gold. Because they see something happening in the global picture. What's happening there? Why is Russia buying so much gold?
Well, I think that everyone is recognizing that you know, we're not going to be living in a U.S. dollar-centric world for much longer. And I think that the wise countries are preparing for this by establishing some other alternate medium of exchange or store of value. And when you go through the periodic table, this is what I always say, you find that there's really only one way to supplement any form of trade. Remember, you can't predict what type of trade you're going to have in the future. Russia can't predict if it's going to sell China a lot of oil, a lot of grains, a lot of babushka dolls. But what it can do is it can stock up on an intermediate commodity that has the same cost inputs as any other good or service. And those inputs are energy, labor, and time. And gold happens to do a very good job of absorbing